that, well, HDFC reported a good set of Q4 numbers as the company saw its best AUM growth in 12 quarters at over 14%. Abhishek Kothari caught up with Keki Mistry, the Vice Chairman and CEO at HDFC, and began by asking him about the quarter gone by and how they see growth going ahead. Listen in.
The growth has been strong, as we've been saying for some time now. If you look back over the last 4 or 5 years, just to give you a sense on how the growth was coming, till 2017, we were seeing growth coming from all segments of the market. And then we saw from 2017 till 2020 that the metros, the heart of the metros, the tier 1 cities in particular, were seeing a bit of a slowdown. More so the higher income bracket customers. That has changed. So today what we are seeing is we are seeing growth coming from every segment of the market. So it's not only the tier 2 and the tier 3 towns which are growing, it is equally the tier 1 towns which are contributing to the growth. And that is reflected therefore in a higher loan amount, higher average loan amount than before. Our average loan amount in the previous year was 29 lakhs and 50,000 rupees. And this year, the average loan amount has gone to 33 lakhs. So the roughly 10% higher loan amount is reflective of the pickup in demand in the metros.
Okay. Your asset quality has declined sharply on a sequential basis. Now, is it due to the RBI relaxation, or is it with RBI's rule of NPA classification?
No, it is the numbers that we are reporting is after considering the RBI classification. So if you look at a gross non-performing loan number for individuals, it has come down to 0.99% under the new method. Under the old method, it would have been even lower at 0.78%. And the collection efficiency for individual loans has been extremely strong. The collection efficiency for this quarter was over 99% on an average. In the non-individual segment, our gross non-performing loan number, again, as per the new method, in December was a little over 5%. That has come down 4.76%. And the overall gross non-performing loan number under the new method is now 1.91% gross, and under the old method would have been 1.74% gross.
The cycle of rising interest rate scenario has already begun. How do you see interest rate rising over, let's say, over the next 6 months to 12 months?
See, my view, and I said this before on interview with CNBC, is that my expectation is that during the course of the current financial year, we should, when I say current financial year, I mean up to, let's say, March of 2023, I would think that RBI would probably be 2 or 3 rate hikes of 25 basis points each. A lot of people expect, or a lot of people talk about the fact that the US interest rate rise will be a lot faster. And I think it's again very important for everyone to understand that US is a completely different market compared to India. Historically, inflation in the US has always been very low, and inflation in India has been relatively higher. Today, we are in a situation where the roles have reversed. Inflation in India is lower than inflation in the US. And therefore, US would probably be expected to take a much more aggressive stand on bringing down inflation and increasing interest.
What would be the outlook on developer book? Is it the right time to grow that book? How do you see the competition in that segment? Will you be able to carry on the same business, post the merger as well in the corporate sector?
The bank recognizes the fact that to grow the mortgage book, which is something the bank really wants to do because it increases the maturity profile of their assets, you also have to do construction finance. So the bank is fully cognizant of that, and all the expertise which comes from HDFC will move to the bank. So all the expertise, the relationship, all of that, all the individuals working in HDFC will move to the bank and will carry that relationship. Now, here you must recognize one thing, that construction finance loans get disbursed over a period of time. Unlike, for example, a lease rental discounting loan. In a lease rental discounting loan, the property is already leased, there is someone who's paying a rent, and the entire amount of the loan gets disbursed in one installment. Whereas with a construction finance loan, the disbursement is made steadily over a period of time and is linked to the actual construction taking place.
So what proportion of your book will qualify for priority sector lending target for the bank post the merger?
So as far as affordable housing loans are concerned, whatever is the affordable housing loan requirement, we should be able to meet, because that is the core business that HDFC does in any case.
All right, numbers have been strong. And of course, I mean, more importantly, as you